Good morning and welcome to the Division of Local Services webinar relative to completing the tax rate recap forms. My name is Jennifer McAllister and I support training initiatives here at DLS. As many of you know, DLS promotes sound municipal finance management practices and supports local officials by providing guidance, training, and oversight. Before we get started, I want to remind participants that this webinar will be recorded and posted on the DLS YouTube channel for future reference. If you have any questions during the presentation, please use the Q&A function on the menu bar, and they will be answered at the end of the presentation. Today's presentation will be led by BOA supervisors, and to kick off our webinar, I'm pleased to introduce Jared Curtis from the Bureau of Local Accounts, and he will be followed by Andrew Nelson and Tom Guilfoyle. Go ahead, Jared.
Thank you very much, Jen. Welcome, everybody. Good morning. As Jen mentioned, my name is Jared Curtis, and I will be presenting with my colleagues Tom Guilfoyle and Andrew Nelson of the Division of Local Services, Bureau of Accounts. Next. Today, we will review the steps to completing the tax rate recap and discuss the various municipal officer roles in the process of submitting and completing the recap forms. We will also walk through the supporting forms that need to be completed when finalizing your community's tax rate recap. Next. To access the tax rate support forms and information needed to complete the tax rate, log into Gateway and click on the tax rate tab at the top of the page. Each local official that logs into Gateway will have different permissions based on how the Gateway administrator in your community has set them up. This slide shows a snapshot of the tax rate recap landing page. Next. On the left side of the tax rate recap landing page, you will find the various links to the tax rate support forms. You can also find a frequently asked questions section that will provide you with helpful information. Next. The tax rate landing page provides valuable information about the tax rate process. The landing page discusses pertinent tax rate form updates and offers instructions on how to complete recap forms. For example, fiscal year 2023 marked the first fiscal year where clerks could enter their own Proposition 2.5 votes directly into Gateway. On the landing page, DLS posted instructions on how to navigate the new voting process. Assessors will find a section on how to complete assessment forms, and accountants and auditors will find additional information on how to complete the finance forms. For example, there is information on the new Page 3 support form that was rolled out in fiscal year 2023. There is also information about the new LA5 form that will be available in fiscal year 2024. I will discuss the LA5 form in greater detail later in the presentation. Next. The landing page also provides links to various forms and templates that may be required during the tax rate process. For example, we have the Enterprise Fund User Charge template. This template is used when a community's estimated enterprise fund revenues exceed their actual revenues from the prior fiscal year. Later in this presentation, Andrew will discuss this template in greater detail. If you need Gateway support, their contact information is located at the bottom of the landing page. Next. For quicker turnaround on getting Proposition 2.5 votes into our Gateway system, clerks are now tasked with entering the ballot vote information. Clerks should enter both wins and losses. From the tax rate landing page, you can find the links to enter vote information directly below the tax rate forms. This is a screenshot of the tax rate landing page highlighting the various vote links. Each different Proposition 2.5 vote has its own link for you to enter the ballot information. Next. This is a screenshot of the debt exclusion vote entering form. Once you click on the Votes Debt Exclusion link, the debt exclusion form opens. This form displays past debt exclusion information that has already been entered. If you want to add a new vote, at the bottom, click on Add New Row. This inserts a new row at the bottom of the form for debt exclusion information to be entered. The form asks for the following information: date of ballot vote, was it a win or loss, the number of yes votes, and the number of no votes, the purpose of the vote, the department that the vote applies to, and the applicable fiscal year. Once the clerk has entered the proper information, they must sign, save, and submit the new vote. Next. This is a screenshot of the override vote form. The form is very similar to the debt exclusion form. The form asks for the following information: date of ballot vote, was it a win or loss, the number of yes votes, the number of no votes, the purpose of the vote, the department that the vote applies to, the applicable fiscal year, the amount of the override, and whether or not the vote was a pyramid. Next. Prior to having your tax rate submitted, several forms must be completed by the assessors and approved by the Bureau of Local Assessment. Among the forms that need to be completed in advance of the tax rate approval are the LA4 for certification of property values, the LA15 for the approval of interim year adjustments. Communities that are not in a certification year must complete this report. Assessors must adjust values between certification years to reflect market value. And the LA13 for approval of new growth. New growth is the amount of tax-based growth for the current fiscal year. Once a community's values and new growth have been approved and LA5 is generated, I will discuss this form towards the end of the presentation, as it is one of the last things that must occur prior to submittal of your community's tax rate. The Select Board or City Council hold a classification hearing in which the assessor informs them of the ability to have a single or split tax rate, as well as local options that can be adopted. The levy limit worksheet and the DE1 for debt exclusions, if applicable to your community, must also be completed. Andrew will be discussing both forms in greater detail during the presentation. Next. And now I will turn it over to Andrew Nelson to discuss the levy limit sheet.
Thank you, Jared. If you want to go to the next slide, Tom. One thing I'd like to say about this presentation is the handout is designed so that all of the numbers flow through the entire presentation. This is meant to look like a real recap, so you can look back at one form to see where a number came from. The numbers are consistent throughout the presentation. We've tried to include everything in there that you would have for a sample recap if you were to do one. So you should hang on to the handout for future reference, whether you keep it digitally or print a copy out for yourself. And as they said, it will be available on the YouTube page. So this is the levy limit worksheet. This is one of your starting points for the recap. It is largely prepared by our data bank folks. There is some input here that comes from the communities that feed the whole thing. It's broken up into three pieces. There's a top third, which is the prior year's levy, the middle year, which is we're calculating your levy limit in this year, and then the bottom section is your maximum allowable levy. I'm going to walk through the two middle ones, but you'll see that last year's levy for this community was $65,916,491. Next, Tom. We included an LA13 in here, like I said, just so you would have some backup for where the numbers came from. You'll see that there's $288,032 of new growth in this community. That number carries through onto the levy limit worksheet. I'm not going to get into how to fill this form out. It is a BLA form. And if you have questions about it, you can reach out to your BLA representative. Next, please. So this is the middle section of the levy limit worksheet. This is where we calculate this year's levy limit for the most part. We carry through with that number I mentioned was last year's levy at the start there. That's line A. We're going to add in any sort of changes during the year that were done by BLA. You get your 2.5% through Proposition 2.5, your new growth, which just came from that LA13. If you had an override, this is where it would be added in. An override takes place as a ballot question. It has to be approved in the community, and it is a permanent increase to the levy limit. Once it's on there, it stays on there and carries through every year, including the 2.5% increases you get every year. So we now calculate here Our levy limit for the year is 67,852,435, excuse me. Next slide, please. Now we get down to calculate the maximum allowable levy. This is the bottom third. These are temporary increases to the levy limit. So we've got a levy limit there that we just carried down from the previous section. We're now going to add in debt exclusions, any capital exclusions, any overrides, stabilization fund overrides, excuse me, here. A debt exclusion is similar to an override in the sense it needs to be approved at town meeting or city council. They're mostly in towns generally, but and it also has to be approved by the voters at a ballot question. But a debt exclusion is a temporary increase to your levy. It is usually used to pay off debt associated with a capital project, a building. You might build a new school, a new police station, a new community center, and each year you would be allowed to add in the principal and interest associated with the debt that was approved. That'll take your levy limit up. It gives you more space so you're not eating into your levy to pay that debt off. It would stay on there until that project is paid off. A capital exclusion is the same as a debt exclusion, but it's a one-year exclusion. It's not something you'd be borrowing for long term. If you're buying a police cruiser or a couple of cruisers, something you're not going to borrow for a long term, you may put that on here as a capital exclusion. Again, it needs a ballot question. All of these things go on this section, and they come off on a yearly basis as debt is paid or changed depending on the amount of debt. But this maximum allowable levy, 72,453,724, you cannot levy more than that in the current tax year. Next, please. This is the debt exclusion form that you have to fill out to get that number. You will see that the number on here, the 4,321,296, is the number that carried over to that levy limit form. Some communities have, no debt exclusions. Others have. I have a community that I work with that has, I believe it's 7 or 8 pages most recently of debt exclusions. So you can have, it depends on your community and their appetite for debt and their appetite for excluding that debt, how many projects you're going to have that are excluded. This form is filled out generally by the treasurer collector, the finance director, someone who's really in tune with what's going on with the debt and knows what's happening on an annual basis. I'll go through the columns here. Column A is the date that the ballot passed. That's when you had the election in town and you approved the project. B is pretty self-explanatory. It's the purpose of the project, a school, a library, a police station, what have you. Column C is the date of the original borrowing. So if you started with bands, it would be the first band date that would go in here. If you started right with bonds, bands are temporary debt, bonds are permanent debt. If you started right with bonds, as many people did in the past rate environment when the interest rates were very low, then that date would go on here. If you do subsequent borrowings, you still keep the original date in here. Column D is whether the debt is permanent or temporary. As I said, a ban is temporary, a bond is permanent. Column E is what was excluded the previous year. That column populates automatically in Gateway. It comes from the previous year's column I. So column I from the debt exclusion the year before will automatically fill in for column E. Column F is what you actually expended. So like an example in the first project, the school project, you said you were going to spend $301,678. You did spend $301,678 in debt that principal and interest that year. In most cases, that number is going to be exact. It's going to be what you expect it to be. If you have a debt schedule on permanent debt, you should know what you're paying. So there shouldn't be any discrepancies here. Column G is what you have to exclude this year. This is what this year's schedule is telling you you owe. Column H is any reimbursements you have. There are 2 types of reimbursements that are just about to disappear that used to be the most common kinds. That was the old MSBA, which was the School Building Authority reimbursement. We only have 2 years left on the original system, and there are a few places out that still have that. That number goes in here, and then on the old premium system where you had to amortize the premiums over time, those would go here. Other things that might be here is if you're column F is less than your column E. So you spent less than you actually excluded. Because that money was raised outside of Proposition 2.5, the accountant needs to reserve that money on the balance sheet. It cannot become part of free cash. It gets reserved. It's given back in the next following year as a reimbursement to reduce what you would need in the current year, and then you raise less this year. So it's providing the money that you raised over what you should have last year, over what you paid, and it's giving you credit for it this year. The other type of common reimbursement we might see is if a different fund, the general fund, is paying some of the debt. If you have a community preservation fund that's paying a portion of your debt or all of that debt, and it was done as an excluded project, the amount the community preservation was paying would be here. I have a community that has a grant, a trust fund that was set up, a gift, I guess is a better way to say, a gift to the town to help pay for a police station. And they take a portion of that every year that pays the debt for the police station. That money is shown here because you're not going to raise it through taxation. Next slide, please. So now we're into the actual recap itself. The recap is a 4-page document. This is page 4 of the recap. We're going to start at the back and work our way forward. The recap is set up so that, well, the easiest way, that page 4 is all of the appropriations. This is everything you've appropriated at your city council or town meeting that was set up by the community. Page 4 goes from last year's page 4 to this year's page 4. So if you set your recap on November 1st, November 1st, then every meeting that comes after November 1st goes on the new page 4 until you set your recap this year. So this form is the responsibility of the town clerk. We know they don't fill it out in every community, but they are the person responsible for it. They are the person who has to sign off for it. If something is wrong with it, they're the ones we're going to come talk to. So let me go through how this works. You're going to have a line for every town meeting you have. If you have an annual and a special town meeting on the same night, like this community did, then you would have 2 lines for it. 1 line for the annual, 1 line for the special. You'll see that there with the 4/26/2022 meeting on this one. You'll see the first line is for 2022. That was their special town meeting. And then the next one is for 2023. That's their annual town meeting. You'll see the bigger numbers there. They voted the budget that night. So each column has got a special purpose for it. The first column is the date, and then you've got the financial year that it is affiliated with, as I said. Column A is the total appropriations from that meeting. That's going to sum up in Gateway. It's going to take all the columns across and add them up. Column B is what's coming from raise and appropriate. This is what you're going to get from taxation. Column C, and each one of these columns from C on has a backup form, which I'm going to get in further detail with in a few minutes. But each one of those forms has a backup, each column has a backup form that speaks to that specific purpose. So column C is from free cash. That's going to be on the form B1. This is any votes you made from free cash except for votes to reduce the tax rate. But anything you're spending free cash for otherwise is going to be reported on this form. Votes to reduce the tax rate show up on page 2 of the recap, and we'll get into that a little bit later. Column D is from other available funds. These are available funds to the community that you can vote for any legal purpose. They get reported on the form B2. Column C is from offset receipts. I will touch on those briefly in a few minutes. They are reported on form A1. Column F is from the enterprise funds. If you have enterprise funds in your community, which many communities have these days, you're going to report all of them here in column F. And on each enterprise fund will have its own individual form A2. Column G, if you have community preservation funds, also many communities have this now. then you're going to report that in this column and on Form A4. But the total of this page, page 4, is going to be all the appropriations done at town meeting.
Andrew, can I jump in for one quick second?
Absolutely.
Anywhere in, you're looking right now, you're looking at page 4 of the Gateway screen. Anywhere in Gateway, you see a tan cell, I guess we'll call it tan for a color. Those are calculated fields, and you will not be entering in those. They will be automatically told for you. So when we're going through all of these slides and you see the green versus the tan, generally the tan are calculated, you won't, and the green, which are really white when you're doing it, are your input cells. So I just wanted to add that for a little help.
Thank you. And on to the next page, please. So this is the Form B1. This is your free cash form. Any free cash votes, whether they be to reduce the rate or to spend on traditional purposes for free cash, are going to be listed here on the B1. It is broken up into 2 sections, Part 1 and Part 2. During a given fiscal year, you may have access to 2 different pots of free cash. The current year and then the prior year. Part 1 is the prior year. This is free cash that was certified. If we're using the traditional cycle, your free cash is generally certified in the fall. You're setting your recap a few months later, but your town meeting was in the spring. This is money that was available to you in the spring that you voted prior to June 30, when free cash expires. Free cash, as you know, expires every June 30. Same with retained earnings for your enterprise funds. They expire on June 30. You then submit a new balance sheet as of July 1st, excuse me, and to your rep will certify that. Once you have it certified, it is available fund to be spent again. That is the second free cash that you have available during a cycle. The top part is the free cash that expires as of June 30 in the year you're in. So you had that at your fall town meeting. At your annual town meeting, sorry, in the spring. So that number is certified. This community had $9.6 million. It was certified, as you see, on August 9th. They didn't spend any of that during the fall that year. Had they spent any money during the fall that year, it would have been on line 3. That's money that's spent on the before they set their recap. If they're voting it for the current year, the year that we're going into, the budget we're passing, which many communities do, that's where it goes on that line 4 for this money. They spent $5.9 million of their free cash on the 23 budget, which is, in this presentation, 23 is the most current year. It's the year we're about to begin. And then line 5, you'll see, is money that they spent from that free cash certification to reduce the tax rate. This is money that was specifically used to offset the tax burden for the taxpayers. They did not have any of that. We then go down to Part 2. This community set their tax rate before their new free cash was certified, their fall free cash. If they had their free cash certified, you would see numbers here. Often communities have a fall town meeting and they need their free cash for that fall town meeting. That you would definitely see then in those yellow boxes there on line 1, a free cash number and a date certified. If they spend some of that money at a fall town meeting, it's going to go on line 3 here of Part 2. If they spend some of that money to reduce the tax rate, that would go on line 4 and also on page 2. They did not have any free cash certified, so they did not spend any. Next slide, please. This is the B2. These are other available funds that you're allowed to spend during the year. The most common things you're going to see here are receipts reserved for appropriation funds, your stabilization, betterments, things like that. Any available fund that you have that you can spend. Some of these are things that are going to offset the general fund budget. Some are going to be for things outside of the general fund budget. You know, if you're spending stabilization for some capital items or something, they're going to be reported here on the B2. You need to have the money on hand when you vote it. You have to have as much as you're voting on all of these items. So column A, we're asking, how much money did you have when the appropriation was made? Column B is the amount you appropriated. Column A should be higher than column B or equal to it at minimum. This form is filled out by the accountant. And the total on all of these forms is the total that should be on page 4. They should be tying back to page 4 of the recap. So you'll see that this 5.7 million is going to be the number on page 4. Next slide, please. All right, the A1, this is offset receipts. There are only 15 communities remaining in the state that use offset receipts, and the number is decreasing almost annually. So these may disappear at some point or get down to a very, very few. I don't know of anyone who's been adding them. They're taking them away. Offset receipts are a type of receipt that comes in for something that is then voted to offset the expense related to it. Some common ones are, things like your wiring inspector. There's a fee you pay when the wiring inspector goes out. That money is used to offset the wiring inspector's salary. There are a couple of communities left. I think I know of one that still does their water and sewer receipts within the offset receipt. Some recreation departments are done, as you see, through the offset receipts process. One of the major things you have to know here is if your estimated receipts, which is column B, exceed column A, then you have to get approval from the director of accounts. So you have to upload some documentation here explaining why it's going to exceed and why you expect this number to be realistic. And there's an enter button on your screen. You hit that. This is done prior to submitting your recap. You should do this in advance because it's going to go to the director or the deputy director. They will review the information you've sent in, assuming they feel that the information is sufficient. They will approve it. It will come back you will get an approval note, and we will get a note in our system that says it's been approved and allow you to proceed. Until that step is done, this form cannot be submitted if the estimated receipts are in excess of the actual receipts. So do not wait till the last minute if you have higher estimated receipts than actual receipts. This form is also filled out by the town accountant, and the number that you're estimating is the number that's going to tie to page 4. Next, please. All right, the A2, these are for your enterprise funds. These are the most common thing that will hold up your tax rate, I would say. Just getting these filled out properly, and some places have many of these. I know Tom has a community that has, I think, 9 enterprise funds. I have one with 7. So there are some communities that have just a lot of these. The opportunity for making an error or for missing something is very high, so they can be very high stake for the timing of getting your recap approved. So we're going to show you a couple of them here. This one is for sewer. The most common enterprise funds are water and sewer. If you have a rate-based enterprise fund, something like water or sewer, where ratepayers are the ones providing the revenue for it, and your estimated receipts go up over the actual receipts, you're going to have to provide there's a template we provide, and you're going to have to provide some information in there. We'll show you that in a second. But I'm going to go through the actual form first. This is the top half of the A2. This is the revenue piece. This is all the revenues you're going to get. You're going to get your user charges, which in something that's a ratepayer system is going to be your big thing. You've got other departmental revenue, investment income, and then you've got the total revenues there. What's below it is any retained earnings that you voted for the current year's budget. And there are 2 lines for this. That's because just like the free cash that we went over, you have access often to 2 different pots of retained earnings. The first one was the money that will be expiring on June 30 of the year. That's the money you would have had available to you at your annual town meeting in the spring. The second line is money that you may have had appropriated for a fall town meeting or later that is available to you once it's certified in the current year, but you still have access to use that for the current year's budget. There's also a line for other enterprise funds available. That can be a few different things. It's not a line that we see used often, but in this place, they had $2.7 million of actual revenues last year, and they're only estimating 2.5. So they would not need to provide any more information to us as far as this, because we're comfortable that if they got 2.7 last year, they will likely get 2.5 this year. But if those numbers were reversed, we would want some backup that showed that why they think they're going to get $2.7 million this year as opposed to 2.5 last year. Next slide, please. This is the remainder of the A2 form for the same enterprise fund. And this is all of your appropriations and then the offset between the revenues and the appropriations. So we looked at all the revenues a second ago. The part 2 is broken up into 2 areas, A and B. A is costs appropriated in the enterprise fund. These are your direct costs. These are the cost to operate that enterprise fund. The most common being, your salaries and wages. If you had any capital outlay, it would be there. There's a line for other if you need it. Part B is your indirect costs. These are things appropriated in the general fund that the enterprise fund is going to pay for. Your employees that work on the enterprise fund are going to have health insurance and pension and other, you've got shared employees, the town accountant, the town manager. Some of their salaries can be used as indirect costs in the enterprise fund because they deal with overseeing those and doing work on them. The treasurer collector is going to do the billings for them, likely. So you are allowed to do indirect costs for the enterprise funds and bill them, but you're not going to break their salaries out directly. So they're going to be still appropriated as part of the budgets that they're associated with in the general fund, but you can bill them back to the enterprise fund here. And please use these lines. We have provided all the different lines there. We have some people and we send them back or ask them to fill them out more properly in the future that will just lump all of this on other. And if you put everything together, it makes it difficult for us to determine whether they're reasonable numbers. Imagine this community did not have any debt, but if you drop $2.2 million in there, in the debt line, and then you put everything on other, we don't know that there's any debt in there. Do we know that you're not billing, $2.2 million of debt as town employees or health insurance? It would be misleading. So we ask you to use those individual lines there. So the enterprise fund has $2.3 million of direct expenses, but it needs to pay for $2.5 million of expenses because it's also paying for $214,000 of those indirect costs that are in the general fund. We now go down to section 3. This is where our revenue is available. That came over from the first part of the enterprise fund, the revenues that we looked at a minute ago. They had 2.5 million in revenue, which is exactly what we need. So we're looking good there. When you go down to part 4 is what's going to tie to page 4. So this is only the amount of the appropriations that were done in the enterprise fund. So you'll see now, even though we're paying 2.5 million in expenditures, only 2.3 of it was appropriated in the enterprise fund. So that's what we're putting here, the amount that came from 2A above. If there was a subsidy, some of that would be picked up by taxation or free cash or some other available thing. But in this case, they have the money in the enterprise fund. It's fully sustaining. It's taking care of itself. Next, please. This is the template. Jared mentioned this earlier. It is on the landing page. This is the template you need to provide if your estimate is higher than your actual. We're asking for the most common reason when your estimate is going to be higher, the most common reason is you raise rates during the year. That's going to be very self-explanatory. We just asked you to do a little math here and show us that that's going to work. You put the old rate in, the new rate. You put in the usage you had last year, that's actual usage, and then what you're estimating for this year goes in. If you're showing an increase in estimated usage, you probably need to explain why you're expecting more, especially if it's a real material number. It may be a new development. You can show us that, a new development came online and, 500 new homes have been built or whatever it might be, or there was some giant new commercial plant or something built in your community that's going to require an increase in water, a sewer, or whatever it might be. We do get some interesting explanations here, but if you're expecting the revenue to increase year over year, we're expecting something to explain why it's going to increase. We don't want to set you up for failure that you have a deficit going into the year where we're like, you just pass the number just to plug the expense side of your budget, which we do see on occasion. Next slide, please.
Andrew, can I just jump in again 1 second?
Absolutely.
On any rate increases, those need to be voted prior to setting the tax rate. So that's very important. You can't say to us, we think we're going to increase rates next month at the next meeting. We will hold your tax rate and wait. You have to have them voted prior to having their tax rate certified.
Great point. And remember that you need to be able to, if you don't set them, if you didn't vote them, and you don't vote them until December when you're submitting your tax rate, you've had bills go out and the part of that year is gone. You can't go back and capture that revenue. So now your rate increase, if you were planning it from July 1st and forgot to vote it, didn't vote it, delayed it, whatever the reason might be, then you can't count that extra revenue. You might only get 6 months or 7 months of the higher rate as opposed to 12 months of it if you haven't voted it yet. Next slide, please. This is another enterprise fund. This one is not a rate-based enterprise fund. This is a golf course. So you're going to have greens fees, cart rental. I'm not a golfer, whatever else revenues you have, from a golf course there. But you'll see that they have less revenue. They have less estimated than they had in actuals, which again makes us happy in the sense that we're not worried now that you are not likely to be set up for any sort of deficit. They also used appropriation. They used retained earnings. They appropriated it from both fiscal years. They appropriated some from their prior year and some from the current year. And they have a total revenue available to them of $4.6 million. Next, Tom. They appropriated direct expenditures of $4.3 million. You'll see that's their salaries and wages, and they used retained earnings. That's what they called it, but I'm sure it's for some capital items or something like that, or maybe even just general operating. They have indirect costs of $280,000. It's a golf course. My guess is they have a management company. That's the administrative part, I would guess. This isn't one of my communities, so I can't speak to it specifically, but I'm pretty sure that's probably what it is. So they have an indirect cost there of $280,000, and $4.6 million is the total expenditure. They have 4.6 in revenue, so they're going to be very clean that way. Again, the 4.3 is what goes on page 4. The total of all of your enterprise funds down here on section 4 is what is going to tie to page 4 of the recap. You will get error messages if these things do not tie. And now I'm going to turn things over back to Jared for a few minutes. He's going to do the Community Preservation Fund. Jared.
Thank you, Andrew. As Andrew mentioned, we're going to talk about the A4 Community Preservation Fund, which is a support form for the tax rate recap. Chapter 44B must be accepted at town meeting and by the voters to establish a community preservation fund. Your community must have a ballot vote to establish a surcharge to be placed on the tax bills up to 3%. Acceptance of the Community Preservation Fund creates a special revenue fund for appropriations for open space and recreation, historic resources, and community housing. Unappropriated revenues remain within the special revenue fund. The A4 is completed, signed, and submitted by the accounting officer. Next. This slide shows you a snapshot of the A4 Community Preservation Fund form. Column A reports your community's actual revenues from the prior fiscal year. Column B reports your budgeted revenues and appropriations for the current fiscal year. Let's take a look at Part 1, Column B, which reports the following revenues. The estimated surcharge is the amount brought in by the additional tax on the real estate bill. The state trust fund distribution is the estimated amount that will be received from the Commonwealth's Trust Matching Fund. Other is for interest earned or other funds appropriated into the Community Preservation Fund. Your community can also appropriate as a revenue source available funds from community preservation undesignated fund balance, open space, historic resources, and community housing special revenue fund account balances. Part 2, Column B, reports the following appropriations and reservations. You have appropriations for community preservation projects, acquisitions, debt service, and other related appropriations. Appropriations for the Community Preservation Committee administrative expenses. These appropriations cannot exceed 5% of the total annual revenues in Part 1A. Reservations to the open space, historic resources, and community housing special revenue funds. Per the community preservation legislation, each year your community must appropriate and/or reserve 10% of the total annual revenues from Part 1A to open space, historic resources, or community housing initiatives. If your estimated revenues exceed appropriations and reservations, you can appropriate the difference into a budgeted reserve to be spent later in the fiscal year. Prior year community preservation fund deficits must be raised or provided for from community preservation funds. The total appropriations and reservations amount must tie to the tax rate recap, page 4, column G total. Community preservation funds cannot be used to reduce the tax levy. Next. And now I will turn it over to Tom Guilfoyle to discuss page 3 of the tax rate recap.
Thanks, Jared. Andrew and Jared have just done a nice recap of all the supplemental forms that fill into page 4 of the tax rate and also carry to page 2. I am now going to jump back to the actual page 3 of the tax rate recap, where you report all your estimated local receipts. We ask for your actual and your estimate. So prior year actual, current year estimate. We do not want you including any receipts that would be included on any of those other forms that Jared and Andrew just talked about, the A1, the A2, or the A4. And we will go there next. So this is your page 3 of the tax rate recap as it appears. The accountant will fill out column A and column B. We have under section lines 5, 6, and 7, some communities who are not enterprise or have water and sewer as estimated receipts. They would be included there. If you obviously have an enterprise fund, you'd be reporting it on the A2. Offset receipt, some couple places have it there as well. You'll do all your inputting on page 3 of the recap. Now, we also added a supplemental page to the recap where you will list your explanations, but this is the first half of your local estimated receipts. This is the second half of your local estimated receipts. Pay special attention to, on the left-hand column, there are some lines with an arrow. Those are included in the municipal revenue growth factor, which I'll get into in a minute. There's sections on the top half and the bottom that have those categories included, and you'll see those next. This is the page 3 support form, which was new last year. There are 4 tabs on it. The first tab is just a copy of what you actually inputted on page 3. We used to ask for an Excel upload of this, but we now have it hard-coded in Gateway, so there's no duplication of data entry. Any line that appears to have an increase from over your actual receipt from last year to this year, you are required to put in a comment. Only increases on this page require a comment. We had a lot of places in the past put in comments on every line. You can. We do not need them. They're not necessary. We only want to see them on the lines that have increases. What we're looking for on that is not, we anticipate we're going to get more money. You've got to have a good reason. Facts and figures are good, better than, we hope it's going to be a better year. You've seen, investment income rates are higher. We'll buy that, but we want to have good explanations in there to help, keep the process moving. A lot of times, well, you can't submit it blank anymore, but if you put in a general comment, your field rep will bounce back to you and say, hey, can you give me some more information on this? The next tab we will go to is the municipal revenue growth factor. Again, those were the lines with the arrows in the left-hand column. All right, these items specifically are used as a component of the municipal revenue growth factor, which goes into your Chapter 70 formula. On this form, any increases or decreases, 20% plus or minus, need to have an explanation. So we're looking to analyze any big swings in these specific categories, which could affect your Chapter 70, your municipal revenue growth factor portion of the Chapter 70 calculation. The third tab is your miscellaneous recurring tab. So this was a spot of a lot of confusion last year. The first line, where it says line 22 right here, that is coming in from page 3 of the recap. What we're asking for is for you to detail what makes up the actual and estimated amounts. So in this case, they had bond premiums. A lot of places were leaving this blank because they saw that the total was already on the form and it matched the total at the bottom. So they didn't have to do anything. What we're really looking for is all of the detail in here. Okay, so please give us the detail. If you have a large number of items and they're smaller amounts, you can group them together on one line and put in a couple of explanations. But we really want to know what the biggest items are in there. And, we prefer to get a full breakdown, but we know that some places have, could have 25, 50, 100 items. So we're not looking for you to put all that detail in unless it's needed. The last tab is your miscellaneous non-recurring estimates. Again, same thing. Please give us the detail below here. So this community had their cable funds here. They were one of the few communities that did not adopt it as a receipts reserved or an enterprise. They had it strictly going to the general fund. So they put those receipts in there, and that's the detail. But the biggest, the biggest thing I can stress on this is that we need the detail. I'm going to jump it back to Andrew, I believe, to go on to page 2.
Thank you, Tom. So page 4, as I detailed earlier, was all of the appropriations you made at a city council or town meeting. The legislative body appropriated. Page 3, as Tom just went over, was all of the local estimated receipts you have available. We're now moving to page 2. Page 2 is broken up into 3 sections also. The top section is everything you're going to have the community spend during the year. The middle section is going to be everything you have available to fund those expenses. And then the bottom section, the third section, is going to be your tax levy. It's going to be the variance between those two. So this is part 2 of page 2. The first line you have here is the appropriations. This is that total amount, column A of page 4. This carries over from there. It's going to come over. You had 113,685,120.05 was what you appropriated on page 4 of the recap. Now we have 10 items here, 10 things that you can add to the recap that do not need town meeting or city council approval to add to your things you're going to add and you're going to potentially tax for. The first one is amounts that come from tax title. These are expenses associated with tax title. There's a form for that. I'll get into it in a moment. Next thing is debt and interest charges not included on page 4. If you had some debt and interest that was not appropriated at your city council meeting or at your town meeting, you still need to provide for that. You have to pay for your debt and interest. It may have been something that was an omission. It may have been debt and interest that you ended up incurring or finding out you were going to incur after your town meeting or something, and you did not know that you were going to incur this. You got an update from your financial advisor or something, but that money still needs to be raised. On that, you need a letter from the treasurer collector to the assessor stating that you need them to raise. All of these things here on this group really need good communication through the community, because anything going on here may have been unforeseen, especially something like your debt and interest. It certainly may not have been part of the original vote for something. So, and some of these numbers can get big, and they can, if you don't have a lot of levy capacity, they could blow up your tax rate at this point. Number 3 is a perfect example of a big number that could pop up. That is a final award. It used to be called final judgments. It was changed to awards because now it includes like industrial accident courts and things like that. If a judge adjudicates that the community has to pay and signs off that they have to pay for something, then it can be raised here without appropriation. It needs to be signed off by a judge, whether it be, a regular district probate court judge or like I said, an industrial accidents board judge or something like that. Some sort of adjudicatory board needs to sign off on this, and then you can raise it there. A retained earnings deficit is now a line here on page 4. That is any deficit that you had in your enterprise fund that you carried over that the enterprise fund isn't going to be able to provide for through itself, then it's going to be raised here. Cherry sheet offsets. These are offsets on the cherry sheet. They're things that go directly to the most common one. Every community gets public library money within their cherry sheet money. The cherry sheet money is the money you get from the states for your chapter 70 money that you're going to get from the state. Some of that money, like libraries, there are a couple others also, but everyone gets the library money. That money goes directly to the libraries. It's not something that the town can spend as they see fit. So it's considered an offset because while you're getting it, it's not really an available fund for the general fund. A revenue deficit. I'm coming up on, I think I just passed 30 years here, 20 something of them in Bureau of Accounts. I've yet to have a revenue deficit in one of my communities. Hopefully I'm knocking on wood here for those of you who can't see. They're very rare, but if you end up in a revenue deficit, they're rare, but they're also very bad. You would have to raise it here. It means you're paying for prior year expenditures in the current year, which means you're taking away available funds for your current year's budget. Offset receipt deficits. That form A1 I went over, the offset receipts, remember I said only 15 communities in the state have it. If you end up not collecting enough to cover the expenditures you have, then you would have a deficit that needs to be raised here. Also very rare, seeing only 15 communities have it, and they've managed them pretty well the last few years I've seen. CPA, Jared mentioned there was an unappropriated, unreserved number. This number flows through to here. It balances out that form so that if the CPA did not appropriate or reserve all of the money they were taking in revenues, that revenue isn't flowing through and offsetting your general fund. So this number is basically balancing that equation out. Number 9, snow and ice. That can be a huge number. Hopefully you've prepared for it and fit it into your budget if you're raising it. If you end up with a snow and ice deficit as of June 30th, you can provide for it by any legal fund during the year. If you have not provided for it by the time you set your tax rate, you have to raise that amount. It goes here on the recap. There is a snow and ice form. I will show you that in a few minutes, but it needs to be raised there. This community had a $10,700 snow and ice deficit. That's something that's pretty easy to fit in there. We have communities that have $1 million snow and ice deficits. Not as easy to fit into your budget if you're not prepared for it, if you're not aware of it. You need to have communication between the communities, the different departments and the planners so that they know during the budgeting process what kind of number they're going to have to cover there. Other is anything other than these that is legally allowable to be raised here. You reach out to your rep if you have something, and they would work with you on what they need to support this and if it's an allowable number to go there. So in their case, their lines 1 through 10 equal $1.2 million. That number is getting added to what we're raising. Then we have the state and county cherry sheet charges. These are monies that the state charges you. They come on the opposite side of the cherry sheet. The cherry sheets provide money to you, but there are also some things they charge you for. I will show you one of those forms in a minute, and we'll go over the charges. Overlay, this is your allowance for abatements and exemptions. This is what you're expecting to not collect in property taxes. No one collects 100% of their property taxes. This is the amount you're kind of expecting to not receive during the year. You're raising that amount because you don't think you will collect that. It's usually based on historical numbers. All of those things come up to $116,257,276.12. That's everything this community anticipates needing for the year. That's their total budget that they feel they need this year. That's the first section of page 2. Now we're going to go down to what we have to pay this. Oh, I guess we got the support forms first. Excuse me. So this is the tax title form I mentioned for the first line of those 10 items. This is filled out by the treasurer collector. The collector, if you're a community that has those positions separate, it's going to be filled out. It is not allowed to be used for salaries, but and I've included the next 2 pages of your handout. If you want to skip over to those, Tom, are an old bulletin we have that walks you through what's available, what's allowed here, and you can use that as a reference for what you can put on here. That's filled out by the treasurer or treasurer collector or the collector if you only have one, signed up, submitted to the gateway. Next, please. So now we have the cherry sheet offsets. This is the cherry sheet. This is the revenue side of the cherry sheets. This community is getting $1.7 million in state aid from the cherry sheets. As you see, they have 48,128 of that is public libraries. That's the one I mentioned earlier. School choice is a common one, but this community does not have school choice. Looks like they are part of probably a regional school district. So none of that money is flowing through to the community because they have a regional school. So they only have public libraries in this case. That 48,128 is what you're going to see on the offsets line, the cherry sheet offsets line of page 2 there in those items. Next, please, Tom. And here is the charges. So these are the things the community is paying the state for. They're actually not paying them, but they're being charged them. It's a net against your actual cherry sheet. But you'll see they have mosquito control projects, some air pollution projects, your RMV non-renewal surcharge. This place has a regional transit. And then there's Suffolk County retirement to make up all of their charges. These are things the state is charging them for. That was that number we saw as cherry sheet charges. It is $936,944. Next, please, Tom. So if you haven't submitted your balance sheet or your balance sheet hasn't been approved. If your balance sheet's not approved or not submitted at all, by the time you submit your recap, you have to include the letter in lieu of balance sheet. This is something that you are certifying, the town accountant submits it and signs off on it, saying that even though my balance sheet hasn't been certified yet, I'm letting you know there are no deficits that should be raised on the recap. In this case, they did have one deficit that needed to be raised. That's snow and ice that was being raised, and they are raising it. So we want to make sure this sheet ties to what else is on page 2. Next, please. This is the snow and ice form I mentioned. And the big piece of information that you're going to want to really remember from here is that first line, the original budget to the prior year budget. A snow and ice deficit is a legal deficit, meaning it does not hit your free cash. If you have snow and ice deficit, a legal snow and ice deficit of, in this case, it's $10,700, we would not hit their free cash for that $10,700. Same thing if it was $1 million, $2 million. Excuse me. But in this case, the reason we're doing that is you have to fund your snow and ice budget at least level. It can increase, but it cannot decrease. So the prior year budget for this community was $197,100. They made the same budget this year. That means they are protected and they have a legal deficit should they have one. If that went down any amount of money, it is no longer a legal deficit. If that was 197,000 rather than 197,100, or if it was $80,000 or whatever, they have now rolled the dice for the year. It's only for the current year. If you decide to cut that cut the snow and ice deficit to try and get under your levy or whatever, you're basically gambling that you're not going to have a bad year snow-wise. So, yes, thank you. Where are we? All right, overlay. This is the OL1. This is where we are checking the validity of your overlay. So the top section is the overlay available. That number is going to tie to your balance sheet. That number is going to be, it's coming from your assessor, but it should tie to your balance sheet also. They should be in agreement, the assessor and the accountant, for what you have on overlay. They have $1,031,001.46 available in overlay. Their overlay for this year, this is the amount they're raising on page 2, is $430,000. So the two of them together are going to be 1.4 million of overlay available. Now, I want to call your attention down. This form doesn't look, on our presentation here, it doesn't look exactly like it does in Gateway. We had to cut and move some things around here so that we could fit it on the screen on one page for you. But that bottom piece where it says abatements and exemptions granted, that's off to the right when you look at it on Gateway. But those 5 blocks there, those are the last 5 years and what you had in abatements and exemptions. You fill those out, the assessor fills those out, and we're looking at the average of the last 5 years. A good rule of thumb is you should be raising at least what you've had as an average over the last 5 years. Why 5 years? Because we want to make sure we capture one recertification cycle within your average there. But so they had 421,062.99 as an average. They're raising 430, which is good. That's just a bit over. So then we have, like I said, we had 1.461,065.53 available to us. Now we're going to look at what we've spent in the cycle there. The first 2 lines are anything that was charged after June 30. So June 30 was when the balance sheet was when the balance sheet was submitted as of. If you granted some abatements and exemptions before the tax rate, but since that, we want to know about them here because your balance is going to be a lot lower. And then we add in the amount that we think you're going to get, the 421,062, which is the average. That's what we're thinking you're going to have for abatement and exemptions during the year. In this case, that's all they have. So they have they're going to need 421 during the year. They have 1.4, so they have excess of $1 million and 40,000. Now we want to know, these numbers also come from the balance sheet. These are your outstanding personal property, real and personal property taxes, and any cases you have tied up in court. So they have potential future liabilities if everything that they haven't collected went south, of $968,000. To have overlay surplus, which is money you can release and then spend as an available fund, you need to have more overlay than you have potential outstanding liabilities at the time that you release it. So if we were looking at it right at this point in time, they would have outstanding liabilities of 968,000, and they have 1.4 million. So you're looking at, what's that, 71,000-ish, I'd say, of excess capacity, excess overlay in this case. So they could then use that as a funding source if the assessors chose to release it. But you need to have excess to release overlay surplus. Next, please. This is the middle of page 2. This is everything we have available to us. So the first number is the cherry sheet number. We had looked at that a few minutes ago when we were looking at the offsets. The state is providing us $1.7 million of revenue. Line 2 is that old school building authority money. That's the old system. There are only 2 years left this year, the year we're coming into, and next year, and then it will be gone. I would anticipate that line may or may not disappear from Gateway, but there won't be any payments in it either way going forward, as the system changed many years ago, and we're just running off the old communities that still have those payments. So that's everything you're getting from the state there, that 1.7. The next section, 3B, is the estimated local receipts. That top line is what came from page 3, the numbers Tom covered, that 18.5 million that Tom talked about on page 3 of the recap. That's coming over from there. The ensuing lines in part 3, 3B, 2, 3, and 4, and then also 3C, 1 and 2, are the revenue side of those individual forms we went through earlier. The A1, the A2, the A4, the B1, and the B2. All of those forms, they had revenue associated with the expenditures that were on those forms. You know, the enterprise funds had their own revenue. The community preservation had its own revenue. Offset receipts had its own revenue. Free cash is revenue. And then those other available funds. Those all had a revenue component that are flowing over to here. So we're grabbing those and taking them in here. Then we go down to 3D. 3D is where we talked about earlier. This is where you show the free cash votes that are to reduce the tax rate. Those are those votes that didn't appear on page 4 of the recap, but were part of the B1 free cash form. And again, there are 2 of them, because remember, you had 2 pools of free cash you could have taken money from. If you voted it from the certification that expired prior to June 30, that's the money you would have had available at your annual town meeting in the spring. Then it goes on line 1A. If you voted it from money that was certified in the fall, that you might have voted at a fall town meeting, then it goes on line 1B. If you have a Muni Light plan that gives you money, you accept money from them, they vote money to and in lieu of tax or something like that to help reduce the tax rate, it would go here. If you have some other source of money, if you voted stabilization or something to reduce the tax rate, it would go on the other source line. All of these things need the vote uploaded into page 2 of the recap. There's an upload on all of our gateway screens. You upload the actual town meeting or city council vote that reduced those, that was accepted to reduce the tax rate, and you upload those into here. This community had none. So everything we have available is 43,813,531.05. So the top section had everything we need. The middle section has everything we have available. Next, please.
Andrew, I'm just going to jump in for 1 second again. Andrew just made a very good point. So as you go about filling out all of these forms in Gateway, anytime there's a required upload for page 2, page 3, the A2, the B2, you should be uploading the backup documentation specifically to those forms. We don't want to see all the uploads on page 1 of the recap. We want to see if you have a vote to reduce the rate, we want to see it attached to page 2 of the recap. If you have backup for your enterprise fund revenues, you use the template. We want that uploaded with the A2 form, not just in one general spot on the recap, please.
Thank you. Here is, again, we had looked at this slide earlier, but we put it in here again. This is the total estimated receipts. That's your cherry sheet money. Just to show you where that number came from. Last time we showed it, we were more looking at the 48,000. This time we put it in again so that you can see the 1.7 million and make sure you follow the flow and how everything ties out. Next slide, please. So this is the bottom of page 2. And as I was saying a minute ago, this is sort of the summary and what we're going to tax. The first line, part 4A, that's everything. That was the top of page 2. That's everything we need. That's everything we want. That's our total appropriations plus things that weren't appropriated we needed to raise. So everything we need to raise is 116,257,276.12. Everything we have available to us is 43,813,531.05. That leaves a variance of 72,443,745.07. That's what we need to levy. That's what our property taxes are going to be. The first thing you do at that point when you see that number is go back to the levy limit sheet and make sure that that number fits within it. You want to scroll back and forth for 1 second, Tom, between those two? So we need 72,443,000. Next one, Tom. We have space of 72,453,000. So we just make it. We've got about 9,000 and some change in space here, which isn't uncommon. Many communities tax right up to their levy. Jared will go over the excess capacity piece with you in the LA5 in a few minutes, but we're where we need to be. We fit in our levy. That means we can proceed. We have enough space to tax what we need to tax. Next page, please. This is page 1 of the recap. It's really just a summary and a breakdown of everything that's gone on. You'll see the top of page 1 is what we went over on the bottom of page 2. It's that same little equation. Everything we need, the 116, everything we have, the 43 million, up to the 72 million, which is what we have to tax. You'll see that that number is also the exact same number of column F. This is just a grid that shows you what portion of that 72 million is being paid by which class. This town has a single tax rate. You can have a single tax rate or a split tax rate. This is a single tax rate, meaning everyone in the community pays the exact same tax. So the residential folks, which you'll see in column B, make up 92% of the community, pay $8.11 per thousand. The commercial people pay the same thing. They make up 5% of the community. Industrial is less than 0.5%, and the personal property is just about 2.6%, but they all pay the 811. If you have a single tax rate community, that number in column E is always going to be the same. It will vary and it moves depending on what your shift you vote. If you have a split rate and what types of exemptions you accept and all of that. But those are things that you work out with BLA as you're going through their process. This form is to be signed by a majority of the Board of Assessors. It's something that they all need to get a Gateway password and sign in. They sign individually, you just get a majority. It's something they can do from their home, when they're on vacation, their phone, wherever. So it's not to be signed by the working assessor in town, unless, of course, the working assessor assessor in town happens to be the only assessor, a board of one. We do have some communities like that. But if there is a board of assessors, a majority of the board of assessors needs to sign this form. And at this point, I'm going to turn over to, I believe, Jared, correct?
Thank you, Andrew. Andrew just finished up with page 1 of the tax rate recap. Now I'm going to discuss the LA5. The LA5 options and certification form is generated once the LA4 is approved by the Bureau of Local Assessment. The LA5 indicates the levy percentage allocated by class for residential, open space, commercial, industrial, and personal property. Next. This slide is a snapshot of the redesigned LA5 form that will be rolled out in fiscal year 2024. The new LA5 will consist of 2 tabs. When you click on the LA5 form link, it will open to the Tax Rate Options tab. The Tax Rate Options tab allows you to input data for the residential factor, classification hearing, and any options that your community has adopted, such as an open space discount, residential exemption, senior means tested exemption, or a small commercial exemption. The LA5 was redesigned to simplify the data entry process into the form. All data for the LA5 is entered in the Tax Rate Options tab. Next. This slide displays the signature section of the LA5 Tax Rate Options tab. A majority of the Board of Assessors, the city or town clerk, and the mayor, if applicable, must sign the LA5 form. And on the newly designed LA5 form, you will see that the signatures information requirements are specified at the top. We have had problems in the past with signatures. So the key is the majority of the Board of Assessors must sign this form, the city or town clerk, and the mayor, if applicable. Next slide, please. The Calculated Results tab looks exactly like the old LA5. Based on the information that is input into the Tax Rate Options tab, the Calculated Results tab computes the final LA5 form. No data entry is required on the Calculated Results tab of the LA5. During your community's classification hearing, a residential factor is determined. A residential factor of 1 means that your community will have a single tax rate across each class. A residential factor less than 1 means that your community will have a split tax rate. And as Andrew pointed out on page 1 of the tax rate recap, this particular town has a residential factor of 1, which equated to an 8.11 tax rate. Next slide, please. The classification hearing date, time, location, and adopted on date are displayed once the tax rate option tab is completed and saved. Your community's excess levy capacity is calculated on the LA5. Excess levy capacity is the amount of taxing authority that your community leaves untaxed. So as Andrew mentioned previously, when you were looking at page 2 of the recap, as well as the levy limit sheet, there was $9,978.93 left in taxing capacity. Basically, this particular community taxed to their levy limit. They would not be able to raise their tax rate 1 penny in order to remain under the levy limit. Next slide, please. The Calculated Results tab of the LA5 computes the impact on the tax rate of locally adopted options such as the residential exemption, senior means tested exemption, small commercial exemption, and the open space discount. In this example, the community did not adopt any additional exemptions that would impact the property tax rates for each class. Next. There are 3 types of edit messages that appear on tax rate forms: informational, warnings, and error. So as you're completing the tax rate forms and you click on Save, these types of messages will appear on your tax rate forms. Informational messages are a blue circle with an I in the middle and provide basic information about a particular form. These messages do not have an impact on submitting the tax rate forms. For example, an informational message will appear on the recap edit report once the LA4 assessment and classification form has been approved. The message will state that BLA LA4 form has approved status. No action is required for informational messages. Warning messages are a black and yellow hazard circle and are triggered when the potential for additional information may be needed to verify the reported data on a form. The most common warning message fires when A2 enterprise fund estimated revenues for the current fiscal year exceed the prior fiscal year actual revenues. When this happens, a warning message is triggered informing the local official to upload supporting documentation to justify the increase in estimated revenue over the actual amounts. The local official should upload the supporting documentation directly to the form it is associated with. An error message appears as a red circle with an X. When an error message is triggered, the tax rate and associated form cannot be submitted. Action is required by the local official to complete or update a form prior to tax rate submittal. The most common error messages are triggered when a form such as the levy limit sheet has not been completed and the local official tries to submit the tax rate recap. All required forms must be submitted prior to submitting the tax rate recap. In this case, an error message would fire stating that form levy limit has no status found, cannot submit or approve the tax rate. Once the error has been fixed, the tax rate can now be submitted. Next. Prior to submitting your tax rate recap, we recommend that you review the tax rate recap edit report from the tax rate landing page under the tax rate reports. The recap edit report provides a list of informational, warning, and error messages that fire when the tax rate recap and supporting forms have been completed. The recap edit report can be used as a tool for communities to check the general status of the various edits that are triggered during the tax rate completion process. The report will list the various edits that may need attention prior to submitting the tax rate. This report allows field advisors and communities to review the edits in one location without having to visit each individual form. Next. This slide is a snapshot of the recap edit report. Edit messages are broken out by tax rate form and provide a brief description. Next. There are two informational messages that I want to point out on the recap edit report under tax rate page 4. The first one displays the prior fiscal year total appropriations reported on page 4, column A of the tax rate recap. The second informational message displays the prior fiscal year raise and appropriate amount reported on page 4, column B of the tax rate recap. It is important to check both figures against the current fiscal year page 4 amounts. Substantial variations from one year to the next could indicate that there is a reporting error on page 4 of the tax rate. During the Bureau of Accounts review, the community field advisor may ask you to double check that each of these figures are correct. Next. Some general information regarding the tax rate forms. Prior to submitting your tax rate recap, make sure that all tax rate forms have been saved, signed, and submitted. If they are not submitted, your DLS field advisor will not know that your community's recap is ready for review. Make sure that supporting documentation is uploaded to the proper form and ties to the tax rate recap. If your community has other amounts to be raised on page 2, such as appropriation deficits, make sure that you upload supporting documentation to justify the amounts to be raised. Any amounts voted to reduce the tax rate must be backed up with supporting documentation as well. Next. Make sure that each gateway form is signed by the appropriate local official. Forms signed by the wrong local official will be unlocked and returned to your community for proper signatures. Make sure that your community maintains the local officials directory because emails are automatically sent using the directory once the tax rate is approved. The local officials directory consists of individual local officials within your community with their contact information, phone number, as well as their email addresses. So when the tax rate is approved by the Bureau of Accounts, an email is automatically generated and sent to your community utilizing those emails. If you have any questions while completing the tax rate, reach out to your Bureau of Accounts field advisor. Next. Please visit our website at mass.gov/DLS for training materials and helpful how-to videos. Our training website has information and videos pertaining to Proposition 2.5, as well as setting the property tax rate and issuing property tax bills. At this time, we would like to address questions in the Q&A section, as well as any additional questions that you might have. Thank you very much. There were several great questions that came in through the Q&A, and as Andrew and Tom were going through the presentation, I was trying to answer some of those, and I just want to circle back on some of the questions that came in. And so Tom and Andrew, please jump in as I just go through a couple of these. One of the questions pertained to the new vote section. So if you log into Gateway and you go into the property tax tab and you do not have the links for the Proposition 2.5 votes for the debt exclusion, for the overrides, it means that your permissions are not allowing that. So there's two options that you have. One option is that you can contact your local administrator. Somebody within Town Hall has administrative rights that they can change that. The other way to do it is to contact Gateway Support, and they can help walk you through in setting up those permissions for you to see those Proposition 2.5 vote links. Another question came in regarding ARPA and using ARPA funds on the tax rate. So if your community votes to utilize ARPA revenues to cover a project, maybe it's a sewer project or something that the ARPA funds can be utilized for, that revenue source, as Tom had mentioned, can be put on page 3 of the tax rate recap in line 23, miscellaneous non-recurring revenues. Tom, Andy, do you guys want to jump in on this particular one at all, or?
That's probably a specific enough question that if someone's going to do something there, they may want to reach out to their rep to get it specifically. If you've appropriated it at town meeting, it's going to end up on the B2. If you're just using it to cover something that it's allowed for, it's going to end up on page 3. But that's probably more of a specific question that should be dealt with by the community and their field rep, rather than trying to give a blanket here in a chat. You guys
And
agree?
I just want to jump in with a general comment. I apparently jumped over it in my notes, and it's one of my biggest lines is when you're estimating on page 3, your estimated receipts, you should be as conservative as possible. You want to be conservative. You don't want to be pushing those receipts. Conservative, if you use a conservative estimate and you come in stronger, that's going to go to the bottom line undesignated and help your free cash. So be conservative when estimating receipts. And the other point that comes up when we do this live, we usually have a couple of town accountants with us. They tell us how they estimate their, come up with an estimate of their estimated receipts. And they would look at a 5-year average. So they look at all their local estimated receipts. They have it in an Excel spreadsheet, and some of them use a 5-year average. That's a common question we get. How do I know what I should estimate there? So I hope that helps as well.
And before we go into anything specific, I just want to say, if you have questions here and you don't want to type it in, or it's a specific type question, you can reach out to any one of the 3 of us after the presentation, or reach out directly to your field rep with the question. We're willing to answer any questions you might have. If it's something you don't want to ask in the group or aren't sure how to word it in a little chat function or something, reach out to your field advisor or field rep, or your one of the supervisors here.
Another question that came in was city versus town clerks. So in terms of the tax rate recap, city council, as you mentioned in your question, they typically vote on their budget later than most towns, and that's done in June. You follow the same process. We recommend that when a community has their town meeting, and it's been voting on, and the minutes and the motions are certified, to go ahead and fill out page 4 of the tax rate recap. And we would recommend that as well for a city. Once the city council votes on their budget, and it's been approved and adopted, then we would recommend that the city clerk do the same thing, go in, fill out page 4 of the tax rate recap.
Almost everything within the recap is the same for cities and towns. There are a few minor things. We tried to highlight them. Jared mentioned that the LA5, the mayor's signature is required if it's a city. There isn't anyone beyond the majority of the board there for the Board of Assessors for a town, but the mayor's signature is only required in a city. That's one of the few real differences in this.
Another question came up about opioid funds, and I'm not going to spend too much time on this.
That's another one that should probably just go to your rep and talk to them about it individually.
Right. So we recommend just reach right out to your field advisor.
Yeah, that's not so much within this purview.
Another question came in regarding the A2 and debt within the enterprise fund, and they asked, well, where should we report that appropriation? So on page 2, on the A2 enterprise fund, part 2A, there's a breakout of the first section is wages and expenses. The second piece is capital outlay. So if it's a capital outlay item, it could go there. If it's a debt item, you could put it on the other line and then just type in debt. Tom, Andy, do you guys have anything to add about that?
Well, more than likely, if it's debt, it's probably within the general fund debt budget.
Yeah.
Which you would then put it as an indirect cost. Likely, if it's voted in the general fund debt budget, then it's going to be an indirect cost on the debt line. If you haven't voted it in the general fund debt budget and you, for whatever reason, broke it out and made it a direct expenditure of the enterprise fund, then you would put it on the other line in 2A. But almost always we see the debt as part of the general fund debt budget.
Another great question came in regarding the overlay. And Tom, I'm going to have you bounce to 2 different slides. Slide 50 is page 2 of the tax rate recap that Andrew Nelson went through. And we just want to pull that up really quick. And then we're going to bounce to slide 67 shortly after that one. But as Tom's pulling up slide 50, the question came in, why is it when I report an amount on the overlay, for the overlay, why does it change when we submit the recap? And to give you a visual to hopefully help drive this home a little bit. So this is a snapshot of page 2 of the tax rate recap. And you can see under 2D, the allowance for abatements and exemptions. In this particular case is $430,064.07. So the community is raising that particular amount for their allowance for abatements and exemptions. Now, Tom, if we go to slide 67, which is page 1 of the recap, we'll get an idea of why that particular number may change up or down. So this is a snapshot of page 1 of the tax rate recap. And what you can't see at the bottom of the form, before you submit the form, there's what's called a recap adjustment button. And a community needs to click on that button prior to submitting the recap. And the reason they have to do that is because when we look at page 1 of the recap, in part 1, under the tax rate summary, 1A, 1B, and 1C, those figures are all flowing through the 4 pages of the tax rate. So from page 4 to page 3 to page 2, and they end up on page 1. The table that you see where it says class and it has columns B, C, D, E, and F, That information is coming from the LA5, which is being populated by the Bureau of Local Assessment Forms, the LA4, etc. When a community submits their tax rate, the two circles in 1C and in column F, those two figures have to equal each other. And what happens before you click on the recap adjustment button, those two numbers are slightly off because of rounding. So when you click the tax rate recap adjustment button, the first number that gets adjusted is that overlay amount on page 2. That way there, it's going to tie out those two figures. Tom, Andy, do you guys want to add anything else to this?
Well, yeah, it's the rounding there. One number is to 4 decimal points, the other is to 2. So there's going to be a minor adjustment that needs to be made. The system uses overlay as where it's going to round the number. It will round it so that it'll bring the two of them in agreement. As Jared said, they have to match on those two things. If for some reason you do not have a number in overlay, it'll use the motor vehicle excise on estimated receipts will be the number that is rounded. Anything further, Tom? You want anything?
No, I guess the only other thing I can add to this is it's important that when you're filling out the recap, you do not submit your overlay form as one of your first forms. It should be one of the last forms you submit before the tax rate, because if you do submit it early and then you haven't adjusted page 1 for your rounding, you're then going to shoot a warning message that your overlay balance doesn't match what's on page 2 of the recap. So you would want to submit, your B1, your B2, your A2s, all can be submitted as you're doing them, but hold off on the OL1. And that should be the last one you submit before you submit the tax rate. Another note on this would be to make sure that you do not submit the levy limit prior to submitting your DE1. So complete the DE1, submit the DE1, then it will allow you to submit the levy limit. If you do it in the reverse order, you're going to get an error message and you're going to be calling us to unlock forms. So DE1 needs to be done before levy limit, and OL1 should be one of the last ones you submit before submitting the tax rate.
Thank you for that. Yeah, the only last thing I'll say about the rounding here is the larger your community, the bigger the rounding is going to be, because it has to move a bigger number. The larger your budget, the larger thing, the more you're going to have of a rounding factor. You in a small community with a small budget, it may round it $20, $6, something like that. The city of Boston's going to have a giant number that turns, because you have to, to move something half a penny or something is a lot more in a place the size of Boston than it is in a very small community. I think we've answered that one enough.
Yep.
Another question came in regarding the residential exemption, and we recommend that you contact your Bureau of Local Assessment field advisor on that. There is also a residential exemption calculator on our website that will break out where the break-even point is. Another question came in regarding what's the rule of thumb regarding a split versus a single tax rate?
That's complete local policy.
Yeah, that's something that you want to talk with the administrators about, the assessor, the finance director,
Well,
the accountant.
At most classification hearings, the assessor is going to make a presentation that gives you 2 choices, and then that's the choice of the Board of Selectmen or the city council in a city that decides whether they want to split or single. But that's totally a local political decision. We do not opine on that at all.
Another question came in regarding the submission of tax rate forms and the order. And Tom, I think, just answered that question, did a great job with that. So if you do have a follow-up on the order of those, drop another question in there. Let's see what else. We have a where is solar pilot programs in lieu of property taxes recorded or accounted for? This here is another question reserved, I think, for the Bureau of Local Assessment. You know, I'll just say one thing quickly about it is we typically see it in the values on page 1 of the tax rate. That's bumping that up. Andrew, Tom, do you guys want to add anything about that, or should we just leave that for the Bureau of Local
Yeah,
Assessment?
I'll leave it.
I would contact your local assessment field rep for that. That's more theirs than ours. I don't want to speak out of turn.
All right, another question came in. From where are the actual final figures for column G of the DE1 derived? So for the DE1, you should be working with your financial advisor, your bond counsel. You're going to be provided a sheet that's going to tell you about your debt, you know, whether it's out 20 or 30 years. So those figures should be your final figures. That's where those should be coming from.
Column G for permanent debt is going to come right from the debt schedule related to that project. Column G for a ban, you're going to have to talk to your financial advisor, and they should be able to give you an estimate of what the payment's going to be for that year, what you're going to have for an expense that year on the ban. It is more common to see a ban, you know, when you're doing an estimate like that, you're often not going to hit it exactly. So you may, and you're usually going to be conservative, go a little higher. So you make sure you have enough money to pay it. And then you will see there's an adjustment in the ensuing year. And if it's a ban that keeps rolling, you may have an adjustment for multiple years on the same project. That's the situation where the accountant has to reserve the excess that was excluded, and then you use it in the following year pay down. But on your permanent debt, that should come right from the debt schedule, and you know, it should be exact. Your debt schedule is not going to change in most cases unless you refunded during the year or something, which currently no one's refunding because rates have gone through the roof. So
the next question, yes, the recap adjustment button will appear on page 1 of the tax rate. So when you log in and you're working on your fiscal year 2024 tax rate, the recap adjustment will be on page 1.
yeah, it pops up when it's not in agreement. If those two numbers are out of agreement, the button comes back. Once you hit the button, it disappears. But if you make some changes to it that then bring it out of whack, the button will reappear.
The next question comes in. I think this one would be good for Tom. If town council votes to apply money from free cash to pay down some of the levy, is it done on page 2 of the recap?
Can you say that again? If town council, oh, all right, town council, yeah.
So
Yeah.
town council's voting money from free cash to reduce the tax levy. Is it done on page 2 of the recap?
Yes, page 2. Any votes to reduce the rate specifically on page 2 and not on page 4.
They will have a different effect if you put them on page 2 as opposed to page 4.
If the clerk is done with page 4, should they sign and submit even if the accountant hasn't completed the other pages? So this question refers back to the order of operation with the forms. So the tax rate, 4 pages of the recap, is the very last form that can be submitted. So the clerk, we highly recommend that once town meeting is over, you go ahead and you complete page 4 of the recap. And you can also sign the form, but you would not be submitting it. All of the other forms must be completed and the classification hearing must be held in order to submit the recap. The recap cannot be submitted until all of the other forms are completed and submitted.
Yeah, the recap 4 pages are submitted as one document. You can't submit page 4 without submitting page 3 and page 2 and page 1. They all go together. So even though page 4 is going to be done well ahead of everything else in most cases, you wouldn't submit page 4 until everything else is complete.
We have a question here about setting up a form submission list. I mean, that's a great idea so that
Yeah,
they,
it's a good idea. We can probably put something together and maybe put that out on the dashboard. We'll look into that.
yep, excellent idea. Let's see what else. There is a good guide on Gateway on what order to submit the tax rate form. So we'll look into that to get something on the landing page with more detailed information. So excellent. Do you have the order of submission for LA forms and recap? So I'd highly, for any of the Bureau of Local Assessment LA forms, we highly recommend that you reach out to your Bureau of Local Assessment field advisor to talk about that. And again, you know, what we'll do is we'll put together a tax rate recap submission forms for the other recap forms, and we'll get that up on our website soon.
And one thing to make clear, not every community is going to use all of the forms.
Every form.
If your community, yeah, there are forms that just don't pertain to your community. You don't have enterprise funds. You don't have offset receipts. You don't have excluded debt. I mean, that's very common in a lot of cities and some smaller towns that are in regions. They don't have any, you know, a debt exclusion. So if you don't have those things, you don't need to fill out those forms. And you shouldn't fill them out. Don't be submitting.
Yeah, don't submit
don't be
blank
submitting
forms.
blank
That's no need
forms.
to do it. No need for that.
I think that's all of the questions.
All right, then.
Excellent.
Well, thank you all for sharing all this information with everyone. It is appreciated. This recording will be shared along with the presentation and other links that were shared. So we appreciate everyone that participated and joined us today. Thank you.
Thank you all.
Bye.
If you need further help,
Thanks.
reach out to your field rep.
Thank you.
Bye now.